Welcome back to Dummy Boy Finance. I'm Dummy Boy, and right now I want to talk about the retail revolution. And so that's what I call this moment in history that will go down as one of the craziest moments as the David and Goliath story continues. First things first, what happened with GameStop? How did it even get to the point that it is? And for those of you who don't understand, I'm going to try to break this down as simple as possible. So you have two sides. You have the longs and you have the shorts. And in the case of GameStop, you had a significant amount of people short, betting against the stock, hoping that it will go down. And now, what exactly does that mean? So when you're a big hedge fund with a lot of money, you borrow shares and then you sell them to someone in hopes that the price is going to go down. So when it goes down, you can buy those shares cheaper and you profit the difference. So for example, I am a big hedge fund. I decide to borrow shares and sell them to someone else, and they buy these shares at $30. My hope as a short is that it goes down to $25 so then I can buy those shares at $25 and I just made a difference of $5 a share, and then they pocket the profit. And so with that scenario, the higher the price goes, if it goes to 40, 45, now me as the borrower, I have to buy back those shares at that high price. And if it's at $45, and I sold at $30, I've just lost a lot of money just in premium. And so with all that, now you have the retailers that are buying, which is forcing the hand of these big hedge funds to make a decision of whether to cut their losses and cover their positions at the current price, or risk the stock price going even higher and in turn them losing even more money. And so that is a situation that we've never seen before, because the big dogs always have the upper hand. And right now we are starting to see some sort of influx. And so how does that look in terms of stock price? If we're looking at AMC right here, a prime example of a short squeeze, we can see right here on January 27th, we closed the day before at around $4.93 and we opened at 20. Now that the price has gone so high up, these billionaires are looking at their accounts like we're down 100, 200, 500, 1,000% on our positions. What are we going to do? Do we sell and take our loss right now? Or do we try to manipulate the markets? And now we're in this situation where there's a lot of controversy about collusion and market manipulation. And where does that come from? So we saw AMC on January 27th explode 300%. The next day, we crashed like a rock right back to $8.63. And so why is that so significant? Well, if we look back at the events that happened on that day, we had trading platforms restricting you to buy the stock, only sell. We had trading halts at support levels on the stock. And so if you just think about that logically, if you can't have any buyers come into a stock and you can only have sellers, you are forcing the price to go down. And so this controversy just started to build and build and build. We saw so many different restrictions. We saw unethical moves, damn near illegal actions that were being taken place in the market. And so here we are the next day, on the Friday, we see AMC go back up because buyers are now allowed to buy this stock. And with all of that being said, there is one scenario that I call the golden ticket. And if this golden ticket scenario works, the retail investor has won. And in this scenario, the following happens. The retail investor buys the stock. The hedge fund covers their position and they take their losses. And now you're the hedge fund, you're sitting back watching this. You've lost a lot of your money shorting the position. How do you recover your losses? Do you hop in? Do you try to short the stock again? Or do you join the retail side and you buy the shares, and now you burn the other hedge funds who are shorting, and now they're going to have to cover their position, and now the price goes even higher where they can then take their money at the top, recover what they lost, and then short the stock. And so that would be the ultimate scenario. And so as much as you guys want to believe that you're having an impact on what's happening, it's very insignificant to what these hedge funds can do. So those of you who are holding 10, 20, 100, 1,000 shares of the stock, it is good that you're holding, But these hedge funds have the ability to buy tens of thousands of shares. And so those guys have the real power. And so for us as retailers to win this revolution, we need those guys on our side. And so if we start to see hedge funds, big money, buy up these shares as well, in hopes of burning the other shorts that are on the other side, thereby increasing the share price to an astronomical level. So right now you have the retail versus the hedge fund, and we're seeing significant movements, but there's going to come a point where the retail investor is going to lose because we don't have enough firepower, money, like the big dogs do. And so in a situation where we see so much short interest, the best thing for that retail investor to do is to hold their position, buy more shares of that stock, and hope that the big hedge fund joins the army. Because there is a saying that says if you can't beat them, join them. And if you're a hedge fund, and so you have to look at both sides of the story. As a retail investor, I want the retail investor to succeed. But if I'm a hedge fund and I'm thinking about how to recover my losses after a situation like this, the most logical thing, in my opinion, is to join the retailers on the long side, buy up their stock, run up the price, burn the rest of the short sellers, and the price keeps climbing and climbing and climbing. If we take AMC for an example, and we say AMC is now trading at $100 a share, think about how many people are going to want to short the stock. And so the more people that are trying to short, but if you still have that big institutional money on your side, you can just keep running up the price. And when that institution says, okay, enough is enough, they sell their position at the top and they short that stock at $200, $300 a share. And that's when everything starts to collapse. So the real power is still in the institution's hand, but the best way for them to utilize this power, in my opinion, is for them to join us, the retailers, to run up this price to the moon and then make the decision after to pull out and short the stock. If I'm looking at AMC stock on the daily time frame right here, we're looking at a stock that has volume over $500 million in shares traded. Retailers don't have that type of power. 500 million shares being traded. There has to be a lot of institutional money behind these moves. And so there's a lot of manipulation going on because hedge funds are trying to play both sides now. Because again, if I'm a retailer and I'm thinking about this as a hedge fund, imagine the hedge fund that actually lost all that money. They're going to try to recover their losses. And the smartest thing is not to keep shorting it because they're just going to keep getting burned. Rather, join the other side, run it up as high as you can, and then short it at the top. And why I think that strategy may be a possibility, because if we keep seeing more restrictions on Robinhood or platforms that retailers are associated with, and you're not allowed to buy that stock, then the sole person or the people that are able to are these big hedge funds, and they can buy up chunks and chunks at a time. And so if you have even a couple of those hedge funds join the rally of the retailers, things could get insane. And so the only thing you as a retailer can do is hold your ground. And the two plays, in my opinion, that retailers should be focused on are GameStop and AMC. There aren't any other options that you can run with. These two have got so much publicity, so much volume, so much short interest, that these two are the ones that you should focus on and conquer. And so you as a retail investor are limited by the funds that you have available to you to use as ammunition in the market, whereas they have plenty of ammunition. And at the end of the day, they are going to get the last say. And that's why people say this is going to end in tears, because they are going to have the last word. But until we get to that point, you as a retail investor, myself as a retail investor, all we can do is look at GameStop, look at AMC, hold our positions, and buy more. And that is only if you are believing in this retail revolution, short squeeze. You can't give up and get scared when they fight back, because they're going to play dirty, and they have shown and proven that they're going to play dirty. They have manipulated the markets in our eyes blatantly. We have seen it happen and nothing is happening to them. So remember, they are backed up and they do have the power behind them. So when it comes to these type of plays, don't diversify where you're trying to find the short squeeze. You go to the juggernauts and you ride those juggernauts. And so I'm not saying go buy AMC stock, go buy GameStop stock. I'm saying if you're in these stocks or these are stocks that you are planning to buy and hold with conviction, because you know there's going to be a battle on the other side. This is not going to end easy. And the way you lose the battle is by selling your shares, because when that happens, they win and they win quick. If you want them to suffer, you hold and you buy and you force them to join your team. And when that happens, that's when you're going to win. And so if you guys like this video, don't forget to like. We're on that road to 10K subs. So if you made it to this point, feel free to hit that subscription button. This is Dummy Boy Finance. I'm Dummy Boy, and I'll see you guys in the next one.